Welcome to The Curve Weekly, the podcast that keeps you up to date with all of the money, business and stock market tea.
Brought to you by the Curve's research team. It's the latest insights on what's happening in the stock market, companies, other money-related news so that you can stay educated and ahead of the curve.
You can thank us later for sounding smarter than those finance bros at your next dinner party.
I have never been more excited for a Curve Weekly than than today.
I've got my power suit on. I'm reading. My reporter crossing live now to London.
It's actually so good.
Yeah.
Oh my God. No, because I look forward to these in general, but I'm looking forward to this now
good to know.
because there's never been a time where I've thought, thank God for the Curve Weekly, because I want to know what's going on and I want a Vic update more so than ever before. I think most of the time, even if it's massive news, I somehow manage to miss it on every, I'm not looking for it. But this, there was no way I could miss it. The amount of messages that we got, or even from friends messaging me being like, what platform do you use? I want to start investing, blah, blah, blah. I was like, whoa. I spent my Friday night, no shit, cleared the decks, got my laptop out and was going through the investing club and all of our investing picks, ordering them into what I wanted to put money into, searching each share and seeing how much it's gone down in the last few days. And then just honestly went on a shopping spree. It was the most antisocial thing ever. I'm over in Australia right now visiting friends and they had friends round for dinner. And I was in the corner on my laptop buying shares.
This is just our weird friend who is.
Who am I?
No, but fair enough. Take advantage of what's going to be probably something that happens maybe every 5 years. Of course, I'm sorry. I'm going to sit in the corner. I am not going to be participating in dinner for one night because this is an opportunity of a lifetime.
And I had to put my
oh my God, you're such a finance bro, being oh, yep. Okay, cool. Yeah, I'll just put the order in now. Yep.
Honestly.
Oh, it's fallen another 10? Okay, buy me 100 shares, baby.
Oh, yeah, put more in. I was having I had to be boundaried. I had to be I'm so sorry, I know I'm being rude right now and I will rejoin the conversation in a minute. I wasn't even entertaining a part-way chat of, oh, yeah, this is my name and nice to meet you. I was just I'll be out for half an hour.
Yeah.
See ya. But do you know what though, interestingly, when I then went into the investing club and saw a lot of people had post being just sharing their thoughts on what they were thinking, it was only then that I started getting anxious and started panicking. I was really excited, confident in my choices and the things I wanted to invest in. And then as soon as I started hearing other people's thoughts or seeing snippets of things online, that's what shook me.
Yeah.
It was really interesting. From a psychological standpoint, I was so sure of what I was doing. But then as soon as I had outside influence.
That's not what we want the club to do.
No, but I mean, it was some people are really scared about what's going on and were feeling really sorry for businesses and I don't know.
So for anyone who's what the hell are you guys talking about?
Oh yeah, fair. Wow, we've done no setup.
So Donald Trump announced on the end of last week that he was going to effectively stop globalisation as we know it. And globalisation just means the ease of movement of products around the world. It's every country leaning into their strengths and producing what they can at the best possible price so that the rest of the world can benefit. So if you think of Germany is known for its auto manufacturers, for example. So, a lot of car companies are headquartered and manufactured in Germany and distributed around the world. If you think of China, it's it's tech, or there's a lot of Asian countries can produce products at a much cheaper price than the rest of the Western world. And that has meant that we've benefited as a global economy from being able to purchase cheaper goods because everyone's leaned into their strengths. And that also means that smaller, more underdeveloped countries like Bangladesh, Cambodia, all those countries actually have a really empowered workforce that can help the economy. So this is kind of what's been going on for the last 20 plus years as every country's leaned into their strengths. And what Donald Trump has done is he has said, you know what, I've had enough. There is too many jobs that are being lost to other countries and not given to Americans. So Apple, for example, manufactures a lot outside of the US. So therefore he's you know what, that's an American company. Those products should be made in America. Nike, for example, nearly 80% of its products are made offshore. And he's like, no, you know what? You're an American company. I want that back in America, and I want that to lead to more jobs for Americans. And so this is what he's tried to effectively unwind.
He's being a selfish prick.
He is. And his whole preface is like, make America wealthy again. So this is why it was called Liberation Day. He announced tariffs on over 100 countries.
He's just so dramatic, isn't he?
So dramatic.
Are you joking? Like, why are we calling it some stupid name?
It's like every economist and every person knows that globalization is great for the world. So anyway, the reason the stock market fell and had a really big fall on Thursday and then again on Friday, and it looks like it will this week, is because people were like, oh gosh, those tariffs were way bigger than expected and covered a lot more countries than expected. So it was kind of, everyone, he'd been talking about tariffs. We'd been talking about tariffs. But the shock factor for the stock market was, oh my goodness, what does this mean for the future? And the future for companies, the future for countries, the future for people, consumers, people buying these products. And so this is kind of what everyone's trying to understand now. Does it mean all those countries will move their manufacturing and supply chains to America? Or will it just mean higher prices and they'll stay in those countries?
Holy shit. So do you reckon people that could actually happen? Like America might end up being the most wealthy, independent financial nation in the world, way more so than it has been before.
Well, that's what they're hoping. So if you take like Lululemon, for example, so Lululemon, Apple, and Nike, some of the biggest, the companies that were hit the most in terms of their share price fall, because they're the companies that have the most offshore production in terms of their products. So if you take Lululemon, for example, they'll be sitting there going, okay, China has just been hit with a 34% tariff. So now anything that leaves China and comes into the US for us to sell, so anything we make in China and now we want to sell in the US is 34% cheaper. They'll be sitting there going, if we moved all that manufacturing to America and it was only, say, 25% more expensive because of higher wages and all of that, that's a good outcome because we're paying 34% more or 25% more. So this is what's going on behind the scenes. Is all these companies are going, okay, if we move our supply chain to America and our manufacturing, all of that, and it's probably going to be more expensive, but not as expensive now as these tariffs, then that's a good outcome. So this is what Trump's doing is he's made them high enough that companies are going, oh gosh, it is not worth our while to be manufacturing in those countries. Vietnam, a 49% tariff. Like Nike had literally just shifted tons and tons and tons of its manufacturing to Vietnam because it was worried about tariffs on China. And now Vietnam's been hit. It's like these poor countries. You've got Nike, which employs thousands and thousands and thousands of people in those countries, will probably leave. And so, yeah, it's like, what will happen? Will there be retaliation? And therefore, the US will back down and Trump will be like, okay, just joking, sorry.
I don't reckon he will. I feel like it's too major.
I feel like it's too far gone now.
Yeah, okay, he can't back down.
These poor companies, it's like they're trying to, okay, well, do we actually action moving our manufacturing? Or will he come out next week and say just jokes?
Oh my, just jokes?
It was also interesting. I spoke to a few friends over the weekend who have New Zealand businesses. And so the tariff on New Zealand is 10%. So not too bad. And actually the biggest winner out of this is the UK. So the UK tariff is only 10%, but the EU is 20%. So the UK is sitting there going, thank goodness for Brexit, because we would have been slapped with a 20% tariff, whereas now it's only 10%.
Oh my God. It's like the first time really in years that people are like, thank God for Brexit.
Yeah. And so 10% looks like nothing. Like that's nothing, in the scheme of things with countries that have got 49% tariffs. And so anyway, I was talking to friends in New Zealand that have New Zealand businesses, and they were like, look, we manufacture in China, but the business is in New Zealand. So if we manufacture in China, if the stock comes to New Zealand and then goes to the US, you get slapped with the Chinese tariff as well as the New Zealand tariff. So that's now 44%. That's not 34%. And it doesn't matter where the place is headquartered. So it's where you manufacture.
Oh my God.
Also, the other winners out of all this is going to be the tax consultants, all those lawyers that are involved trying to shift company locations and stock and assets to try and get around this and make it, the best possible outcome for companies. But at the end of the day, It means higher prices.
What are the top countries that have been slapped? Like, what's the worst, like down to the least harsh?
Yeah, so 46% Vietnam, 44% Sri Lanka, Myanmar's 44%, Madagascar.
Why are all those Asian countries getting so slammed?
Because a lot of the big global companies have moved manufacturing to the likes of Vietnam. So he's like, you know what? I'm going to slap you with, but that's why everyone's coming out of this going, that's really unfair. You're hitting these countries, like just because you and China have a tit for tat going on and the EU now, don't hit these hard, these small countries that are just trying to grow their economies. Other countries like Japan, 24%, India, 26%, Thailand, 36%, Indonesia, 32%. So these are big increases in price. That's, something that's worth $100 is now worth $132 that was made in Indonesia. So it's actually, people have seen, there's been news of people running into Lululemon stores and buying cheap tights and iPhones and like soya sauce and like all of that because all the prices are going to go up. I'm like, okay, everyone, chill.
Oh my God, it's COVID toilet paper times 2.
Yeah. But they're not wrong. It's like literally the prices are going to go up, whether that's because companies have to move their operations, which will take years, or whether it's because literally in a few days' time, this is when these tariffs come into play, the prices literally will have to go up because like you put it as a really good analogy. It's like a door charge. All these Lululemon pants coming into the US are going to have to pay a door charge of nearly 40% more. So
I just think if you were a company, like say you were Nike and you did all of your production in Vietnam, if Trump's only in power for 4 years and it takes you 2.5, 3 years to move everything, is it worth it? Like, because surely whoever comes into power in the US next is going to sort that out. Like, you can't imagine this is going to be or do you think that this is something that could stay for a long time?
Well, there's actually talk of him running for a 3rd term and trying to change the constitution because you can only run for maximum 2 terms in America. So, but this is what's caused, there's been rioting in the streets in New York. I've saw photos from friends of people going, this is not a democracy anymore. This is a dictatorship. And this is Trump and his billionaire friends controlling the US and controlling the world. And we're not here for it. This is not what we signed up for. And so there is a big backlash that is happening.
But like, obviously there's going to be a backlash, but there's been backlash this whole time and it hasn't stopped him doing any of his stupid shit.
I know. But yeah, it's a major headache for small businesses, big businesses, small countries, big countries. But at the end of the day, it's American consumers that will end up paying higher prices. And that leads to inflation, and that means that our money doesn't go as far because we're having to pay more for more goods. Like, it's...
Do you think from like sweatshops and bad treatment of people who in some of those Asian countries are producing, I don't know, quite shit quality products that are being it's essentially slave labor. Like, is that a good thing that it's being moved in terms of like, I don't know, I just imagine a lot of these big companies are not treating or paying people from like a social governance standpoint what they should be. Is that a potential plus? Like, it was moved to America and there'd be more strict regulations on how stuff is produced. I don't know, I'm trying to look for silver linings here.
I know, I can tell. I think there's ways to combat that without removing all the manufacturing or all the jobs from that country. There's ways to put rules in place being like, this is the set of standards that we will have when we're going to employ a factory to make our garments, for example. I think there's more detriment to a country saying, we're not going to invest in your country, we're not going to invest in jobs at all, than investing and saying, look, this is the minimum wage we'll pay, this is the minimum standard of workplace that we will have. I think there's ways around that. And I think there's been so many big businesses where they've had blow-ups because of that, like PR absolute disasters and brand damage, that the standards have been set and the regulation has been enforced. I think the detriment of removing thousands and thousands of jobs from from Vietnam or Cambodia, for example, would have much more impact, bigger impact, negative impact on those countries than putting regulation in place saying, look, this is the minimum wage we're going to pay. Like if you think of China, if you go back 20 years, China was not as prosperous as it is. It didn't have the GDP growth, the gross domestic product, which is kind of the measurement of economy's growth.
Like a net worth of a country.
Yeah. It didn't have, it was not growing and it was not as big as it is today. And that's because Western countries were investing in China because of the cheaper labor, not cheap labor, cheaper relative to the US and to Britain and to New Zealand, Australia. And therefore it gave people opportunity and it gave people jobs to therefore spend that money within the economy and to help it grow and to invest in property and spend and be more productive. And so, I don't know, it's kind of like giving interns a chance, If you think of like these developing countries as interns and you're like, you know what, you've got great potential. I'm not going to pay you because you don't have the experience of a CEO, but I'm going to invest in you and I'm going to put my time and effort and pay you, a smaller amount. And then you're going to become more skilled. You're going to become more developed and therefore you can charge more. And that's what's happened with China and that's why other countries are going to Vietnam. And that will happen to Vietnam eventually. And then we got it going to other countries. And so, we do see it happening and we have seen it happening over the last 20, 30 years.
And so, okay, so then what have we seen the markets? What's happened with like the stock markets around the world? Can we do a bit of a like, okay, This is the US, this is the UK, like all the main centers?
Yeah. I mean, all of them were down from Asia to Europe to the UK, New Zealand, Australia. And it's so funny when you see, because obviously with the time difference, like stock markets aren't open all day. So New Zealand is the first to open in the world. On a Monday, we're the first stock market to open. And
just like Gizzy's the first place you see the sun at New Year.
Exactly. Yeah, I wish it was like we could predict what was going on in the stock market because we're like the first to win it.
Yeah, love that.
So we kind of set the scene. We almost kind of just follow the day before, if that makes sense. But anyway, it does give a bit of a prediction. So if I look at the stock market today, down 4%, that's a prediction that all the other stock markets are going to have really, really bad days.
But is that down 4% from yesterday or from when?
From yesterday.
It's gone down 4% from yesterday.
Yeah. It's now down 10% this year.
What was it on Friday?
What did it go down? Not much at all, because this was kind of unfolding when our market was closed, if that makes sense, because we close and then the others stay open and then it closes. So it's like, but I guess what I'm saying is like there's stock markets that open throughout the day, whatever day you're in, if you're in the UK or if you're in New Zealand. And so New Zealand opens, then Australia, then Asia, then Europe. And so, but the US is the big one that everyone kind of focuses on because obviously it's one of the most impacted. It's the biggest stock market in the world. So it is the one that kind of moves the needle for the rest of the regions. But Thursday, really bad day. It was down about 4%. Friday, down about 5%. Today, it'll be down again.
What I'm trying to figure out is if I had a total mare investing on Friday and I should have waited till today.
No, because nobody can pick the bottom of this. Do you know what I mean? So he could have come out over the weekend.
Just keep investing.
Yeah. Or people could have realized, it's actually fallen a lot and there could be some news that comes out between now and in a few hours' time when it opens up. And then you'd be like, damn it, I wish I bought more. So it's more just being strategic and just if you are buying in this environment, just keep buying, almost dollar cost averaging, but like shorter. If that makes sense.
I wish I had done that because I got really excited and I put all my money in on the Friday night.
That's all right.
Because I was just like, oh, exciting, it's gone down.
I mean, I was buying in March and now I'm like, oh, damn it. I should have waited, but you never know. So it's like, yeah. But anyway, it was the biggest fall since the pandemic. So, when we talk about these opportunities not coming around very often, this is a once in a 5-year opportunity, really. And if I think back to my mindset, the pandemic, it was, I wish I'd bought more. So I'm trying to channel that. Yes, this is different and markets fall for always different reasons. And there's probably in terms of uncertainty levels, it's probably, I guess it's not as scary as it was during COVID. Nobody really had been through a global pandemic like that before. We haven't been through a really crazy, president in the US before. Well, we have actually when he was
we
last
kind
in
of
power,
have.
but-
I mean, I feel like he's maybe been in power before.
Yeah.
But he didn't get much through last time. This is much more impactful globally. Well, it feels like it anyway.
And I think it's also, there's nowhere to hide. Do you know what I mean? It's not like the US is falling and all the other countries are doing well. Every single country here pretty much has been impacted. Every single industry is being impacted. And so it is, I think the difference with this is it's very widespread. We did have companies during the pandemic that were doing really, really well. And we will have companies during this that they're doing really well, but it's just hard to see which ones those are right now.
Do you reckon we could do one of the workshops in the club on that specific topic? Because I know we did that workshop about how now is like a great time to buy and it's on sale and la-di-da. But I would love to do a deep dive on like, even if it's not stock investment ideas that we've looked at in the club already, a bunch of ideas that are a safer bet than some of the other companies right now. Because there are ones, I mean, you speak about this a lot, like recession-proof stocks or like just thinking about it differently. Because I know for me when it came to like buying on Friday night, I bought a couple of indexes. I bought some stocks that I've wanted to buy for a while. And they were things that we've already spoken about. But I wasn't really I was just thinking, I trust in this company. I trust in the stock. Like, for example, Xero was one I invested in and we'd spoken about it in the club and I was like really on board with it. But I was just thinking it's gone down because everything's gone down. I didn't think, I don't know, it would be helpful to go beyond that. Do you know what I mean? Be like, okay, this is what tariffs are doing. These types of companies are going to find it really hard. And I imagine it's going to be, I don't know. It's just like so much to think about. It's like a lot to process because then also my brain starts going to, okay, well, if Nike's doing terribly and their share price is absolutely down the toilet, maybe it is actually a good time to buy because they are, if I think that they're going to sort it out. Or do you know what I mean? It's like, do you buy the recession-proof companies or do you go for the ones that are actually being hit the hardest?
I think it's, if anything to take away from this, it's like making sure you're diversified because I don't know. Do you know what I mean? I don't know if Nike.
Tell me though.
Yeah. But do you know what I mean? It's like, it's buying tech companies, it's buying retailers, it's buying recession-proof stocks, it's buying because we don't know what the world will look like in the next 12 months or the next, 2 years. Will America come out of this way, way stronger and actually be this, incredible economy that's just dominating the world because everything is being produced there? If that's the case, then you would double down on America and you'd be like, you know what, I'm going to own the S&P 500. That's all I'm going to own. I'm going to own American stocks. If you think it's going to have the adverse effect, the rest of the world's going to band together and become, really strong and be like, F you, America, and America's going to have inflation out of control and go into a recession, then you'd be buying global stocks. So it's so hard to know. And I think it's changing every day. So I think if people are sitting there going, oh my God, I'm so confused, I don't know what to do, I'd just say almost keep doing what you're doing and just make sure you're diversified. So if you are only invested in the S&P 500, maybe buy some, global ETFs or some more global stocks.
That's actually something that I bought was the global index.
If you've only got tech stocks, maybe buy some recession-proof stocks. Maybe buy some retailers that have been hit a lot because, depending on the situation, but usually companies that have been hit the hardest are the ones that rebound the quickest as well when we go back to normal. But that's the thing, when are we going to go back to normal? So I don't know, there's lots to dissect, and I feel like even when this podcast comes out, there'll be like updates that, it's changing every day. But some of the winners from all of this is the UK, like we've mentioned. They, being like, thank goodness for Brexit.
So maybe actually then if you were wanting to diversify from a geographical standpoint, it would be looking at an ETF that is maybe a UK base, like the FTSE, whatever it's called, 100.
Yeah.
The FTSE?
Yeah,
100?
FTSE 100. Yeah, definitely.
Has that gone up or has it also gone down?
It's not gone down as much.
Yeah, okay.
So it's all gone down.
It's doing badly, but not as badly.
Yeah. Doing less worse. Less worse.
Doing less worse. Love that.
The Curve Investing Club is the world's first digital investing club for women to build their wealth. It's a place where industry experts like myself And beginners can really join forces to share knowledge, swap ideas, and make money through investing. So if you're listening to this podcast, you probably are aware that saving alone, unfortunately, can't make you a millionaire, but investing definitely could. So we wholeheartedly believe in the power of community and that the best investment ideas come when we collaborate and learn with each other. So bring your friends, your mum, even strangers on the street if you want. There really is strength in numbers, and we're so excited to create a community that's just for you.
One thing also, as soon as this started coming out and the market started falling, I immediately thought of my parents, and I was like, they're retired. Admittedly, they shouldn't have a lot in shares, to be honest, in terms of their investments, but they have to live off their investments. And now they've just seen their pot they're supposed to live off shrink, and how scary that must be. And so this is a really good example of why we say, if you're getting closer to your goal or you're at your goal, whether that be buying a house, retiring, if you were about to buy a house and you had all your money in shares, you'd be really upset right now, and there's nothing you can do about it. So this is why this is like case in point why we say, the closer you get to that goal, the more you should be investing in lower risk things. So term deposits, you're putting money in things that don't move around, because this will impact the amount that you will have to live off or to spend on that house or anything like that.
It's actually a really good point, because I have seen a lot of stuff online of people, they were talking about the amount, like the millions that they lost in inverted commas, because obviously they haven't sold their investments, so they haven't actually lost anything. But I can't imagine what that would feel like. And, because I've taken a lot of my money out of the stock market because I've been wanting to buy a house, I haven't seen, and also, even to be fair, even if that money was in the stock market, it wouldn't have been a giant drop, because it's nothing compared to what some people have invested. If you've invested your whole life and you got to 70 and you've got most of your wealth, in high growth stocks, and then you saw like half of it is lost overnight, I can't even imagine how stressful that would be.
And you're also withdrawing from that amount, right? So you're now withdrawing money to live on at a lower price. You're having to sell at these lower prices. So I think, don't be panicked and feel the need to, I guess, make a real knee-jerk reaction right now, because, you could be making a mistake if you're like, I just need to sell something because it could go down further. Just stick to your plan. Your investment plan, I think, is just try not to
read the headlines.
Yeah. And remember, markets always rebound. They rebound 100% of the time. So it's I think if you're struggling and feeling scared and wanting, you just need to actually turn off all news alerts. Yeah.
Only listen to the Curve podcast. Yeah. Don't listen to the podcast. That might send you over the edge. And if it does, you have to know yourself and do the things that are going to keep you in check, keep your emotions, keep your reactions in a place where you're not going to look back in. Because you've said so openly, and you said this on the workshop that we did a few weeks ago, during COVID, you massively regretted selling at what you sold. You were like, oh my God, why did I do that? And so I think it's we learn from those mistakes. We can learn from the fact that you've been there. There was a global pandemic. The world was locking down. We've bounced back from that.
More so. We've bounced back even bigger bounce. Yeah.
God, it is so weird though. I feel like I should have worn a blazer too. This is huge, We'll look back and be like, remember on the 7th of April, 2025, and we had that podcast? It's so exciting to know what's going on.
It's funny. There was someone in the club that said, they just commented, they're like, keep calm and carry on. I was like, so true. Yeah. I mean, I used to hate that phrase, but it's so appropriate right now. I was like,
so
I love that energy. Just to round out this kind of tariff discussion, there is one company that Trump has said, that is almost being the pawn in this game between China and the US, and it's TikTok.
Oh no, not again.
We've been in discussions around how TikTok needs to sell its US operations, and Trump has said he will look at cutting tariffs to China if TikTok sells to a US company.
No.
Imagine being that business that like the whole nation depends on your decision making. I was like, the pressure. I would hate that. It's like,
Oh my God.
I know.
So sorry. So for anyone that's missed it, TikTok has Trump has been he's had a bee in his bonnet about TikTok for a long time.
Yeah.
He feels like it's breaching, national security, blah blah blah.
Yeah.
It's like they're spying on the US, all that kind of stuff.
Mm.
And obviously, like Meta and other big tech companies are based out of the US. TikTok is the one outlier. So he feels like he doesn't have control over it and he wants it. So the whole sale around, they're basically carving out the US. So the TikTok is like, they're not going to sell the whole business, but they're kind of in a position where they sort of feel like they have to sell the US side of it.
Yeah.
And there's someone they're trying to figure out who's going to buy, right? They've had all sorts of different bidders, including Elon Musk. And basically, are you saying Trump has said, if you sell the US part of TikTok to a US company, we will loosen the tariff. So do you reckon he's doing all this tariff shit purely because of TikTok?
Not purely, but it's like, it's a good time to be, have that deck of cards or, to have that up your sleeve to be like, well, you know what you can do? You can sell your operations and this can all go away.
This is like blackmail.
Oh, it's total blackmail.
Oh my God. Imagine if the world's economy relied on your decision.
Imagine the pressure.
Oh my
I
God.
No, I could not deal with that. Also, another IPO that's coming.
Now, actually, we need to pause before we talk about IPO because there was actually a comment that came through. We've been encouraging people to comment wherever they're listening to the podcast. And someone commented, Gina, and I love this that she commented this. She said, I'm a first-time listener here. I'm not sure what IPO or SEO means. Could you explain any abbreviations in your descriptions maybe? And I thought that's a really good idea because then we can avoid having to like always backtrack and say an ETF is this or a blah, blah, blah. And we can just have a little disclaimer at the start of the episode. So if you're new and you want to keep up and you want to know what's going on, we can put almost like a coding in the podcast show notes so that people can be like, what is that? And go and check. Isn't that genius? Loved that idea. And thank you for saying that because it's like the last thing we would want is for people to be listening to a podcast, think that they don't understand it and then never tune in again. But at the same time, it's like you don't want to constantly be going over the same stuff that so many people do know because they've been listening for a while. So we're definitely going to do that for this episode and ongoing so that anyone can join the conversation.
But IPO means initial public offering, and it means when a company first becomes public. So a lot of companies start out as private companies. You can't really invest in them that easily. And then when they become public, that's when you can buy them on the stock exchange or through Sharesies or whatever trading platform you use. So Shein is a company that's been talking about IPOing for ages.
Think sparkles, think tight, think mesh, think cleavage, think tight, ruched buttocks.
And it has been talking about IPOing in London.
Oh my God. It's a great time for them to IPO in London. No. Plot twist.
Well, the prices of all their goods have just absolutely skyrocketed.
Oh no.
So their whole business model is low cost, direct shipping, and now that's just
it's like the Temu of clothes.
Yeah. And now it's just completely unraveled. So I, as an investor, I would not be investing in Shein right now. And when you IPO, you want as much demand as possible. This is your one time to like come out and like sell yourself and get, the highest valuation you can.
Is this like the only company that's IPOing at the moment? I feel like there must be so many, but we've talked about this one heaps. Why is this one like quite an interesting one?
Because nobody wanted it.
Oh my God, it's like Lady Hetherington in Bridgerton. No one wants to put their name on her dance card. And she's going around and everyone's like, no, not for me.
Yeah, and they're like, will you have us stock exchange? They're like, no. Will you have us? But it's quite good. It's because the operations have been subpar. And that's why no one wants them, because of the PR disaster and like the brand reputation.
We don't condone their behavior and therefore they're being publicly punished.
Yeah. And so anyway, also, you're right. This is the only IPO we've been talking about, but this will become IPO pipelines now. IPO, companies coming to IPO will be very, very quiet with the market doing what it's doing. It's instantly like dries up. Everyone's like, oh, no, I don't want to.
It's like someone's got an ick and your vagina's just gone inverted.
Oh, sorry. I didn't realize you were going to say that at the time I made that sound.
Can I just say one thing?
It's true. Yeah.
No, I was at a festival a few weeks ago and someone in the crowd started talking to me about how private equity is the way to go, and so many companies are not going to be they're not going to be public, and that actually there should be some conversation around funds and making funds that are like private equity, so as in public companies, more accessible for people like you and I who are wanting to invest in them. And I was like, that's kind of interesting. And it did make me think about the fact that there's been hardly anyone that wants to go public anymore. Maybe that will be like a future investment strategy where some people have money in the public stock markets, but then also some of us want to put money in private companies too.
Yeah, there is, it's definitely evolving. Like it used to be harder for us to even buy public companies. You know what I mean? Before trading platforms were a thing, it was very difficult to buy public companies. You did it through a bank and you paid ridiculous fees, or you had to invest through a fund manager. So that's got a lot easier. And then, yeah, you're right. It's just going to become easier to invest in private companies. I think there just needs to be aware of the risk. You know, a lot of private companies are more early stage. They're newer. They haven't been around for as long. So therefore there's risks of that. They haven't weathered, you know, economic cycles.
Yeah, but this guy, to be fair, this was in a festival at like 11 p.m. at night. But he was saying there's like great returns. He was like, summer's like 20%. I was like, okay.
You put your money in and it's in there for 5
you
10
can't
years.
touch it. But I thought, fine, I'd be fine with that. If I was going to be getting a 20% return, I'd be like, sweet, see ya.
Yeah.
Anyway, that's a conversation for another time. Time.
Yeah, the average is 20. There's a lot that don't do well as well. You know, what is it? 90% of startups fail. You know, yeah. Anyway, not to put a dampener on us, but moral of this podcast, keep calm and carry on.
Keep calm and keep investing.
Yeah.
Do we change it? Oh my God. Do you know what happened? Sorry, just to go back to the festival, the one that I was talking about before, Symphony in the Park. Have you been to it? It was amazing.
No, I have heard it's amazing.
It was amazing. It was like a live orchestra. Anyway, this one girl came up to me in the crowd and she said, she was like, I wanted to just say, I wrote this on my notes on my phone because I thought it was like so amazing. She was like, I just want to say the curve has changed my life. She was like, I'm a really qualified person. Like I'm smart. I've got a really good job. The curve has changed my life and my children's life. Like, thank you so much. And she like had like tears in her eyes and I was like, oh my God. Like I was honestly like, I'm writing that in my phone. That's like a moment to remember, you know? So if you're listening to this and you're thinking, maybe this is one of the first few podcasts you've listened to and you feel overwhelmed and we have used a bit of jargon, I'm really sorry if that's the case.
Yeah.
But promise, the whole point of the curve has been to create conversations that are easy to understand, and we're going to make sure that we still like create content that if you are a beginner, you can keep up, because it is the thing, if anyone can learn. So it was just one of those moments where I was like, holy shit, we as a community and as a podcast and as everyone listening have come such a long way. And I reckon there would be a lot of people who follow the curve and listen to this podcast who, when these stock markets have been turning to shit, have not been panicking. I would say a lot of people have been thinking, I should be buying.
So good to see. I love it. Absolutely love it.
So good.
I was going to go down Oxford Street and film me going into sales, create a little reel, me going into sales.
That's genius.
Can
you go do that, please?
You were on leave and so was our social media girl. And I was like, oh my God, I feel so out of my depth. There's so much going on. I don't know what to do.
That's a genius idea. You should have done it.
I know.
You're great at TikTok. You are a TikTok queen. I reckon you should get more into it.
Do you reckon?
Like when you do your like mouthing ones, I'm like, oh, it gives Alex Cooper energy. I really think you need to double down.
I'll do a Get Ready With Me. Get Ready With Me where I talk about Trump's tariffs.
Anyway, loved it. Thank you. Also, for anyone that wants to make sure that you're always up to date with the news and what's going on, we'll put a link to our newsletter in our podcast show notes, because it's such a good way to just make sure you're keeping up to date with what's happening. And also, if you're listening to this and you're thinking, gosh, I'd love to like start investing, or I want more investing ideas, join the investing club. It's such a good time to feel like you've got community and like a bit of guidance from Vic outside of the podcast.
And people are talking about what they're investing in, what they're not, and it's like, times like these is when it's really humming.
Yeah.
Great to see.
I might
Yeah.
screenshot what I invested in and share it in there. Like just do a little, because I think it's
Nice.
quite nice to know what other people are doing.
Yeah.
Anyway, speak to you soon. Thank you for all your research. Loved it.
No worries. Me too.
Okay, bye.
Bye.
Thank you so much for listening to The Curve Weekly. Make sure you hit the subscribe button to stay up to date with all the money, biz, and stock market news. And if you like what you heard, we would love a review. Thank you.
Yes, we would love a review. But if you
Only
did
the
hate
one.
it, please, don't leave one if you hate it. No, but in all seriousness, could you please leave a review? Because it really helps other people find our cute little podcast.
And we hope you have a good week and see you next Monday.
Bye.
Bye. Sweet. Yeah. See you next Tuesday. Lol. See you next Tuesday. I mean Monday.
No, actually, though, new episodes out every Tuesday. Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.